I made over $600 with this new 1-minute scalping strategy, and in this video I want to walk you guys through my full game plan to help you make profits on your next trade. To begin, go to TradingView.com and begin configuring the instrument we'll require. Let's go ahead and add 3 indicators to our chart for this strategy. The 1-minute scalping system by Gustavo Ruby will be used as the first indicator. Then, as the second indicator, seek for the ATR stop-loss finder, created by VeryFit. Finally, let's include Williams percent, which was produced by this developer right here. These indicators will now need to be adjusted. So, let's start by double-clicking on this 1-minute scalping and altering the inputs. The trend duration period will be reduced from 100 to 88 days. We'll also modify the style, so let's change the second bar's colors to yellow. Then, we're only going to leave these 3 options checked. Let's now configure the ATR stop-loss finder. First, we'll delete these tables because we don't need them. Next, we'll reduce the ATR multiplier from 1.5 to 0.85. Let us also uncheck this box. We're not going to change any of the parameters on the Williams indicator. Instead, we'll leave them untouched. Now, let's go over the criteria of this strategy. We will only consider buying if the following criteria are met. First, the baseline must be colored green. Second, the entire body of the candle must be placed over the line. The Williams percentage must send a new buy signal where the yellow line crosses over the blue line, and our trigger candlestick must be colored green. We'll have to wait for a green candlestick if the Williams percentage offers a new buy signal, but the candlestick remains yellow. Right here, we see that all our conditions are met, and this is going to be our trigger candlestick. So, at the close of our trigger candlestick, we will place a buy order with a stop loss at the ATR band. We're going to be targeting 1.5 times the risk. I think this Williams indicator is pretty good. However, we do see that sometimes it issues quite a lot of false signals, so in order to get rid of these, I will try to improve the strategy by completely replacing this indicator. So keep watching until the end for it. The rules for shorts are the total opposite of before. We will only be looking to sell if the line is in red. The candlestick's entire body must be below the line. Where the blue line crosses the yellow line upwards, the Williams percentage indicator must issue a new sell signal. Finally, our trigger candlestick needs to be red. We can see that all of our parameters have been met, thus this will be a trigger candlestick. At the closure of our trigger candlestick, we'll place a sell order. Our stop loss will be set at the upper ATR band, and we will again aim for 1.5 times the risk. In order to fully understand this incredible trading strategy, I want to give you a couple more examples where, on the contrary, you wouldn't have entered the trade. So even though we see the line is green and the Williams issued a new buy signal, the candlestick is not fully above the baseline. So, like I explained before, we're just going to ignore this signal. The line is red here, the body of the candlestick is below the line, and we have a new signal to sell. The problem is that we didn't obtain any red candlesticks during this short signal, so we'll have to wait for another one. This was the position where we had a new one. However, this signal was invalid as well, because the body of the candlestick was not below the line. This short signal was definitely valid because all our requirements were met. So we are going to enter this position and make profits of it. As I said before, I believe we can still improve this strategy, so now I'm going to change this Williams percentage that generates quite a lot of fake signals. We're going to replace it with another indicator, which is called ADX by Bekabu Oyaji. Okay, now we need to make some minor adjustments. So first, let's get rid of this ADX and this 20 level. Okay, the strategy is ready, so let's get into the trading rules. In terms of the baseline and the position of our trigger candlesticks, the rules are essentially the same. So we'll only be seeking to buy if the baseline is green. the candlestick's entire body must then be elevated over the baseline. Finally, when the green line passes above the red line and our trigger candlestick is green, the ADX must send a new buy signal. The regulations for stop losses and take gains will remain unchanged. You can notice that this indicator immediately sends out fewer signals, but those indications are more accurate. We are going to look for exactly the opposite when trading shorts. We are only going to be looking to sell if the line is in red color. The body of the candlestick has to be below the line, the ADX has to issue a new short signal, and our trigger candlestick has to be red in color. In addition, there is a significant exception to the entry rules that I would like to highlight. So, if the ADX indicator issues a new bullish signal and the candlestick is green and above the line, but the line hasn't caught up yet, so it's red, we'll have to wait for the candlestick to fully close before entering the trade. We're only going to take that position if the line turns green on the next candlestick. Also, take a look at how well our strategy eliminates losses when the market is moving sideways. We see that none of these signals were valid because they didn't meet the requirements. And as soon as the price started trending, we saw that we had a valid long entry. You can also try to use a different money management system where you don't have to cap your profits like that. So you can choose other risk-reward ratio, but stick with stop loss I presented to you. Right there, we have a solid short entry. In fact, the ADX has just issued a new short signal, yet the line is colored green. However, the line went red on the next candlestick, so we would have placed a short trade here. Now, take a look at this bullish signal right here. We noticed that it wasn't confirmed because we didn't have any green candlesticks during this long signal, but the very next long signal was definitely confirmed. So I have been trading with this strategy for quite a long time, so I fully understood the concept behind it. In order to help you understand it too, I will give you a few tips I noticed during my trades. First, we want to identify the direction of the trend, and this baseline helps us a lot. Then, the reason we need the entire body of the candlestick to be above the baseline is to avoid the market range. Finally, be patient and wait for all the criteria I explained to you to be met, because rush always carry failure, and you obviously don't want that during your trading sessions. Okay, I hope you now fully understand how to trade using this strategy. So let's actually do our backtest on a 1-minute time frame and see if the outcomes are reasonable or not. I just finished the backtesting, and these results have surprised me. Our win rate is 70%, and the profits end up at 245%. I would also like to mention that these results will be different when trading live, so always try the strategy for yourself before using it. If you want to see one of my other trading strategies I use when day trading, check this video right here, because this strategy works great on the 4-hour time frame. I'll see you guys next time.